Hi everyone, it's Grace. Welcome back to my channel. So the Fed just raised the federal funds rate by 25 basis points as expected. And people are saying 50, 75, 100 basis points, which is like crazy because we have to understand why the Fed does what it did. And in last week's video, I explained the relationships between the Fed rate hike, the Fed's balance sheet, the stock market represented by the S&P 500, and the housing market represented by Miami. I mean, these relationships are not so apparent, which is why you need to look at the historical data and their trends to understand what's going on. So make sure to click here to check out that video. In today's video, I will focus on the housing price and growth trends in Florida since a lot of you are curious about what's going on in the housing market in 2022. Should I buy, should I sell, or should I just simply hold? What's the deal? Before we begin today's video, remember to subscribe to my channel and click on the bell button so you get notified immediately when new videos are uploaded. Also, feel free to give this video a thumbs up if you find it useful. Here's the thing, I can't tell you, yes, the housing market is so hot. You're gonna miss out the opportunity if you don't buy right now. Or, no, the market is about to crash. The Fed is so behind the curve. It's raising rates now. What are you, nuts? You should wait it out. I know a lot of people are criticizing the Fed for overheating the economy and realize that different entities are trying to pressure it into taking drastic actions. But you need to realize that the monetary policy is independent of everything else. In spite of people saying XYZ, it has its own schedule. I'm not sure if you're familiar, but there's this fortune god in China that's responsible for creating wealth in China. And I think it's fair to say that the Fed is the fortune god in the US. And I can tell you that the Fed holds a lot of economic power and it's only responsible for the economy. My job is to sort through all the fuzz and tell you what the Fed's priority is and what it intends to do in a given point in time. You probably also noticed that I use a lot more data than before, whether it's geographical locations, interest rates, prices, or trends. All the data used in my videos are from authoritative resources and they represent the market movement. And I think it's important to show and interpret the data as it is. If there's a kink, an abnormality, or something else, I can't smoothen it and tell you a different story because that's the real market behavior. So let's stick to reality, shall we? Okay, I'll be showing you a couple of maps with the current status of the Florida housing market. The first map is the housing price as of February 2022, and I sort them into cities so you can have a much detailed look into the areas that you live in and those that you're interested in. In case I didn't mention the areas that you want to dig into, I'll be providing all the maps in today's video on my website and my Tableau profile so you can take a look by yourself. So the property price here is the representative price that you'll typically see in a city. The yellow is the higher end and the purple is the lower end. In Florida as a whole, the more southern, the more expensive, and the more towards the coastline, the more expensive. I mean, it's pretty counterintuitive, isn't it? You would think that because of climate change, the coastal areas have greater risks, but this is not the case at all. Miami Beach, Boca Raton, West Palm Beach, Port St. Lucie, Vero Beach, Cocoa Beach, Daytona Beach, a lot of cities along the West Coast goes around or above $500K, which is a very high price point compared to the national median price. Miami has a price of $477K, but going a little bit north, close to where the airport is, the price gets close to the purple end. For example, Opa-locka is just east of the airport and its price is at $328K. Something very interesting is that a lot of developers are rushing into these areas which are being overhauled. They bring in high-rise apartment buildings and multifunctional buildings that include boutique hotels, gyms, resorts, and retail spaces. So if we're talking about investment opportunities, these areas may seem dilapidated for now, but that's precisely why developers rush in, gut the whole thing, and construct new buildings. From a developer's perspective, if everything is already established, what's the point of developing? From a regular investor's perspective, these areas have greater space for growth, so investing a property next to a major development project could reap greater returns. When we compare Miami with the other metropolitans in Florida, Miami has the highest entry price point, which is probably more suitable for investors with higher price thresholds. A very important way of looking at when and where is a good area for investing is by looking at a year-over-year growth. So I also include a map that shows you the growth trend from February 2021 to February 2022 as a reference. In this map, higher growth rate is marked by darker red and lower growth rate is lighter red. For instance, Three Lakes may generate greater returns at 31% with a price at $413K when compared to West Marine with a similar price at $411K with a return at 26%. Another thing I want to mention is that the luxury market is different. Even with very high entry price points like Palm Beach at 1.7 million, its year-over-year growth is at 35%. Another luxury market such as Jupiter Island at 7.3 million price point has a year-over-year growth at 35% as well. So you should know that the luxury housing market behaves very differently than a regular housing market. Then let's look at Port St. Lucie and Cape Coral. These areas mark the highest growth rate of 40% in Florida. Port St. Lucie has a price of $357K with a growth rate of 39%, while Cape Coral is at $377K with a growth rate of 45%. There are a couple of things to keep in mind here. First, the growth rate of the housing market is slowing down a bit because of the Fed rate hike in response to the inflation, as we talked about in last week's video. But the price is still growing. If you don't know the relationship between the Fed rate hike and the housing market, go ahead and watch that video before you watch the rest of this video so it'll be much easier to understand. The important thing to remember is that the Fed rate hike does not decrease the price because the housing market and the stock market have different reaction mechanisms. Now, the growth rates in this map mark the fastest growth, which was in 2021. Going forward, you need to know that the higher the price, except for the luxury market, the less space for growth. So if you want to see a higher return on investment on home equity with lower entry price point, Port St. Lucie and Cape Coral will probably be more suitable for you in 2022 than a more developed area such as Miami or Fort Lauderdale. Other areas with above 40% growth include Fort Myers, Naples, Marco Island, Sanibel, and other areas around them. The only other area with above 40% growth is Palm Coast with a price of $350K just south of Jacksonville. Then let's take a look at Tampa and Orlando, which are key areas for new tech hubs in the South since the pandemic. I think that technological innovation is extremely important for the diversity of industries, and it brings a lot of opportunities for growth in a local economy in the future. So you're not just investing in home equity, but also the opportunity of a city development which has a greater equity multiplier than a more saturated market. Tampa has a price point of $374K with a growth rate at 32%, and St. Petersburg has a price point at $322K with a growth at 25%. The areas to the east of Tampa have even lower price points such as East Lake Orient Park at $258K, Brandon at $342K, and Gibsonton at $329K, but they all have growth rate above 34%. St. Petersburg's growth is slightly lower than that of Tampa, but the coastal areas behave similarly to the luxury market with much lower entry price point than those in the east coast of Florida. I think from an investing's perspective, you need to see the opportunity for growth in the future. And I do see that tomorrow's Tampa may grow into today's Miami, which means that the equity multiplier will be much greater than the trends that you see here. And the same thing will probably also happen to Cape Coral, Port St. Lucie, Orlando, Jacksonville, and other less expensive metropolitans, because higher saturation in Miami will push population and investment into these other areas. Orlando is another great area somewhat similar to Tampa. Its natural environment is probably the best among all the cities in Florida because it has a lot of lakes. A lot of people still prefer to work remotely even after COVID is almost over, and this is probably one of the best and newly developed areas that can meet those demands. Orlando's price is at $345K with a growth rate at 26%, and the prices differ a lot depending on the area. For example, the outer circles have gained greater returns than the inner circles around Orlando. Apopka has a price of $356K and a growth rate at 28%. Winter Garden at $492K with a growth rate at 29%. Kissimmee with a price of $327K with a growth rate at 30%. These suburban areas have seen the fastest growth last year and most likely this year as well. Different price points are very scattered, so you should look at the price map and the growth map side by side when determining which area is suitable for you. The last metropolitan is Jacksonville with a price point of $279K with a growth rate at 28%. One interesting observation is that the surrounding satellite areas have prices that almost doubled than the central area of Jacksonville. So the return on investment in Jacksonville is also very good in terms of its entry price point and year-over-year growth. I'll categorize the metropolitans into 3 tiers according to their price points. The first tier with a price point of $450K or plus include Miami, Fort Lauderdale, Boca Raton, Naples, and Sarasota. The second tier with a price point of $350K to $450K include Cape Coral, Port St. Lucie, Tampa, Orlando, and Palm Coast. And a third tier with a price point of $250K and $350K include Jacksonville, Gainesville, Titusville, and Palm Bay. And the trend is that the growth rate for the first tier is slowing down while the second and third tier are picking up. The only area with a negative growth rate is Okeechobee at negative 12% with a price at $186K. Other than that, all other areas in Florida are growing. I was going to talk about the rental price, but this video is already too long, so I'll talk about it in the next video. So watch out for the announcement because you'll need to have the housing price and a rental price in order to have a comprehensive look at your property investment portfolio. The last thing, which is probably more important than home equity multiplier, is the loan performance of mortgage. The indicator that tells you the health status of a mortgage is the loan-to-value ratio. According to FHFA, the loan-to-value ratio status looks like this. We know that the standard LTV is 80% because lenders usually allow people to put 20% down. As of September 2021, there are more than 61% of all mortgages with a very low LTV of 60% or less, which means that people put down more than 40% or more on their purchase. And there are 18% of mortgages with an LTV from 60% to 70%. So that's like 30% to 40% down. What does it mean? It means that 61% of properties with mortgages in Florida can resist a 40% price crash, and 18% of the mortgage properties can resist a 30% to 40% price crash. And a ratio of 80% or higher LTV is only 21%. And this is the equity last September. Imagine that a lot of homeowners are already building equity through mortgage payments at a speed of 5 to 10% per year. So by the time the housing market does crash, and it's probably not going to happen this year, and we have to monitor as we go, LTV is even lower with stronger crash resistance. So this tells us that the mortgage housing market in Florida is very strong. And I'll talk about the LTV ratios in these other states in the US as well, so stay tuned for more data. Now, I'm not saying that there is no risk factor, but the data shows that the risk is transferred out of the individual mortgage market of the residential properties. Some investors may use other leveraging tools such as wholesale mortgage, margin loans, or corporate loans, or other things. But that's the topic for another video. Let's just keep it simple and look at one thing at a time. So this is today's video about housing price and growth trend in the housing market in Florida. I hope you find it useful. Make sure to check out the maps and the links down below. In the next video, I'll be talking about the rental market status in Florida. As always, thank you very much for watching, and I'll see you on the next one.